So as I said earlier, I'm with LiveOak Bank, and we've done several of these projects with the AgGrid team and Lent Hill. And I want to talk just briefly about the bank, and then I will go into USDA's guaranteed loan program and grant program for renewable energy projects. Just a little bit about LiveOak. We are a federal insured bank. We're based out of Wilmington, North Carolina. We lend nationwide. We have been one of the top USDA business and industry loan and REAP loan guaranteed lender in the country. Over the past several years, we started lending in the renewable energy space in 2016. That's when I came on board to the bank. Previously, I was with the Department of Agriculture here in North Carolina, working on that end of things, processing the loans and grants. But LiveOak hired me to help start their renewable energy lending team. So this just gives some statistics about us. LiveOak is also a very large SBA lender. We've been the #1 SBA lender for the past couple of years as well. We're very focused on small business lending. These are a couple of projects that we have done in addition to the Lent Hill project that we talked about earlier and the High Tone project. These are larger projects that we've done. This one was in Wisconsin, a $104 million loan under USDA's 9003 program, which is for larger projects, and it's a large dairy manure to renewable gas system. We've also done some renewable natural gas projects. This is one that has been done in North Carolina. It was also a very large $50 million loan, anaerobic digester to renewable natural gas using swine and poultry waste as well as food waste. And then one here in Arizona, also a dairy project, $20 million. We used, for all of these programs, we've used USDA loan guarantees. This was a combination of the USDA guaranteed REAP loan program and the business and industry loan program in Arizona. This was just a project in San Antonio, woody biomass compost. Just to let you know, we do all types of different bioenergy projects. And a renewable gas project, we used the SBA loan program for that. It was a landfill gas to power project. So we do have program specialists on our team. I'm the specialist for the USDA programs. Brett Hogarth is our bioenergy expert. He could not be on the call today, but he is the loan officer who works on these projects. Using the USDA loans allows us to have more favorable terms. You can get a longer term with the guaranteed loan program and flexible payment schedules. There's no calls or balloon payments allowed with the USDA guaranteed loan program, so it's a little more attractive than you might be able to get with a conventional loan. We will do interest-only periods during construction and ramp up. We can do working capital loans, and we can offer fixed rates. We do specialize in USDA and SBA loans, and we have people on staff who are familiar with tax-exempt bonds. We also use the Department of Energy program. Those are typically much larger projects. And we have dedicated underwriting teams, closing teams, and legal teams that hold your hand the whole process, and packaging team that will walk you through the USDA process. We try to make it as seamless as possible for you, that you don't have to fill out all the paperwork. We can help with that and get the application submitted to USDA and get you your loan or grant. And construction financing is also available through LiveOak. So I wanted to focus most of my time on the USDA Rural Energy for America program, the REAP program. So it provides guaranteed loans and grants to agricultural producers and rural small businesses. And the funds are to be used for renewable energy systems or to make energy efficiency improvements. And I know today we're talking specifically about anaerobic digesters, but this may be beneficial to some of you farmers for the other grants or loan programs that may be available to make energy efficiency or other improvements on your farm. Agriculture producers can also apply for energy efficient equipment and new system loans for agriculture production and processing. That's also available through the REAP program. So these are the eligible uses for under energy efficiency. If you're improving your lighting, a heating system, cooling system, ventilation, if you're installing fans or any kind of automatic controls or insulation, that all falls under energy efficiency. And so you could be eligible for a grant or a guaranteed loan to use for energy efficiency upgrades that you may be making to your farm. Under renewable energy, it's solar, wind, small hydroelectric, anaerobic digesters that we're talking about today, biomass, geothermal, and wave ocean power. LiveOak mostly does solar and anaerobic digesters. We've done some biomass, but those are all the eligible sources or uses of the grant and loan funds. Also, the REAP funding receives mandatory funding from the federal government each year that's specified under the Farm Bill that's reauthorized every 5 years. The Farm Bill is just being kicked off for reauthorization this year. But in the past, the REAP program has received mandatory funding each year, which means there will be funding for the program every year. They don't have to wait for the appropriators to appropriate a specific amount of money and have a confusion or uncertainty about how much money will be allocated. There is a certain amount each year in the Farm Bill for the REAP funding for the grants and the loans. And as we talked about earlier, as Allison talked about in the Inflation Reduction Act, you've got the tax credits, but you also have an additional $2 billion over the next 10 years specifically for the REAP program. So that $2 billion is all grant money. So that's a lot of money that's going to go out the door in the next 5 years for these programs. So I'll talk a little bit about grants here. Although we don't get as involved in the grants, but we may do some combination loan and grant applications. And Rashi and Abu can work with you on your grants with the combination with the loan that LiveOak could possibly do. So grants can cover up to 40% of the total eligible project costs, and that's an increase under the Inflation Reduction Act. Under the mandatory REAP funding, it's historically been 25% of total eligible project costs are eligible for grants. But with this new influx of the $2 billion, the grants can cover up to 40% of total eligible project costs. So that's a significant increase, and that will be available for the next 5 to 6 years. The funding says for 10 years, but USDA has a schedule of getting it out the door in the next 6 years. And for this year, they've got $800 million in grants, $820 million in grants available. So that's a lot of money out there for grants. The loan guarantees can cover up to 75% of the total eligible project costs. So that means if you're getting a loan guarantee, you have to come in with 25% equity into the project. And the combined grant and loan funding can cover up to 75% of the total project cost. So if you've got a combined grant and loan, you still have to come in with 25% equity. But that 40% grant is a big initiative to get the money out there and help you get these projects started and off the ground. So I'll talk here about the eligible use of funds under REAP. So it can be for purchase and installation of equipment, and the equipment can be new or refurbished. It can be for construction and facility improvements after you have put in your application. So you can't submit an application for something that has already been constructed or started to be constructed and ask for that grant. The grant has to come in, has to be applied for before you start any construction or facility improvements. It can also be for retrofitting of equipment is an eligible project cost, professional service fees, permits and license fees, and working capital and land acquisition can be used, can be eligible with the guaranteed loan only. So a grant doesn't allow any working capital or land acquisition. Ineligible project costs are residential energy projects because these are focused for agriculture producers and for small businesses. You can't use it for farm tillage equipment or for used equipment or vehicles, like trucks, pickup trucks or things like that you would use on your farm. No, none of those types of vehicles are eligible. You also can't use it for pre-application construction and facility improvements, as I just mentioned before. You can't use the ineligible project costs are for grant writer fees, lines of credit, or lease payments. And USDA is also very specific that payments can't go back to an owner or beneficiary or a relative of the applicant. So if you had paid somebody on your farm who was a relative or yourself to do some work, that can't be reimbursed under this program. So talking a little bit about the funding requirements and how you might, the maximum grant amounts and how you might structure a loan here and what you might want to request as far as a loan. Again, under the IRA, it's up to 40% of eligible project costs are eligible for the grant. And USDA is going to use the IRA monies first rather than the mandatory REAP loan money at the 25% project cost amount. So they're trying to get this IRA money out the door first. So up to 40% of the project costs would be eligible. The minimum grant request is $2,500, which means your project costs would have to be over $6,250. Obviously, with these digesters, it would be much higher than that for a project cost. And the maximum grant request is $1 million. So that would make your total project costs, eligible project costs at $2.5 million or higher. But that $1 million grant request or grant availability is really good. It used to be $500,000 under the regular REAP money. So again, there's just this push to get this IRA money out the door in the next few years. So the grants are going to be higher than what they previously were. I won't talk too much about these energy efficiency improvements, but I'll have this slide available for you in case you have any energy efficiency improvements that you might be interested in doing. They're just the grants are smaller minimum amounts, and the maximum amount is $500,000. So again, the guaranteed loan that can pair with the grant, or you can just do a guaranteed loan without the grant. The guaranteed loan can be up for up to 75% of the eligible project costs. The minimum loan amount is $5,000, and these are USDA standards. And the maximum loan amount is $25 million. So again, these guarantees are just the USDA guaranteeing a loan. I don't know if any of you have used FSA loans, or they have direct and guaranteed, but it's similar that a bank like LiveOak, a regulated bank, makes the loan and the government guarantees it. And the terms are negotiated between the bank and you, and there are specific requirements that are applied, but like I said, that we make the loan, service the loan, and the bank guarantees it. So we try to make it pretty seamless. You don't have a whole lot of interaction with USDA on this. We try to handle all the paperwork and questions and things with USDA. So there are application deadlines for these grants. There's no application deadline for the guaranteed loans, but for grants, if the grant request is $20,000 or less, the application deadline is October 31st of 2023. This has 2022, so that was the last application deadline. And if your grant request is over $20,000, the application deadline is March 31st of each year. You can apply, and the guaranteed loan and the grant have to be submitted at the same time. So if we're submitting a guaranteed loan and a grant, the request can be made after this March 31st deadline. But as of this time, USDA is just making these awards twice a year. We're hoping we can get some change to that and make it a continuous award cycle, just because you don't know when your project's going to come into play, when you're going to be ready to submit these applications. And so if you're ready April 15th, then and your grant's over 50,000, you would have to wait until March 31st you could submit it, but you wouldn't know until April of the following year if you were awarded this grant. So LiveOak and several other lenders and lender lobby organizations are trying to see about getting these deadlines changed a little bit to give a little more flexibility to you all. And especially since they have all this money that they want to get out, it would be helpful to have more flexible application dates then. You would apply, I'm sorry.
I had a question, Deborah. Has USDA been receptive to your conversations about that? Because I know Agrid and I'm sure other people who are applying have definitely run into that deadline, and we're in it right now.
Right.
So I just wanted to see what kind of conversations.
Yes, that deadline is set in the regulations that are issued in the Federal Register. So as you all know, it's not an easy process to change things like that. So we're working behind the scenes, and we may try to get it enacted in the Farm Bill, which wouldn't help us now for the March 31st. We're not going to get any relief probably from the March 31st deadline, but we're trying to get some language put in the Farm Bill so it's permanent. But perhaps USDA could make an amendment to the Federal Register notice and allow them this year at later times. But we haven't gotten any feedback. I'm going to be in Washington next week in several meetings. I also chair a group called the National Rural Lenders Association. So we have our lobby days next week. So we'll be talking about this issue.
Okay.
Yeah.
All right. Thank you.
Yeah, sure. So how to apply for the grants. Each USDA Rural Development State Office has an energy coordinator, and this link takes you to that. I gave the New York energy coordinator here his contact information, but I realize some of you are from other states, and you can always work with Rashi and contact me too if you have any problems or questions about the grant process, as well as the guaranteed loan. But if you're applying for a guaranteed loan, you would work directly with the lender, and then we handle all the paperwork and everything on the guaranteed loan side. We handle that with the USDA office. But again, it's a great program. It was kind of not many lenders or people knew about it, but LiveOak really has done a lot of marketing, and LiveOak is very committed to the renewable energy space. So we've gotten a lot of loans out there over the past almost 7 years. We've done a little over $1 billion. Most of that has been solar loans, but we're very involved and very committed to this. And the USDA offices are committed to it as well. And with this new IRA money, I would just encourage you, if you're thinking about doing a project, definitely try to get some of this grant money, because it's out there and they need to get it out. And I think the larger grant projects are kind of easier for them to do rather than doing a whole lot of small grant projects. Not saying that small grant projects aren't important. I'm not saying that at all. But if you're doing a $500,000 grant, that helps get the money out a little quicker. So I would encourage you to look at the grants if you're interested in doing an anaerobic digester project on your farm, because that's what the money's here for. And it is more attractive with this IRA money available. So here's my contact information. And as I mentioned, Brett Hogarth is our loan officer who was not able to join today, and he's much more well versed than I am on the specifics of the loans and the anaerobic digester process, and I'm more versed on the USDA side of things. So that's my contact information as well as Brett's. And I guess I would just open it up for any questions that you all may have, and also feel free to reach out to me in any time. But if anybody has anything right now, I'd be happy to answer any questions. And yeah, Paul's been through the process, so I don't know if you have any comments, and obviously Rashi and Abu have been through the process, but from the farm perspective, Paul, I don't know if you have any comments or suggestions or pointers.
Yeah, well, I do. Yes, as you well know, we've been through it. And here in New York, we hadn't had very good luck. I don't know. There is a state director, and it appears that not the rules aren't all the same for every state. We weren't able to get any significant REAP money, and of course it was before the IRA thing. But it wasn't enough to make any difference. And then some of the things with the guaranteed part of the loan, there was discussion about whether there were business or personal guarantees, and in Rashi's other projects in Connecticut and Massachusetts, the farms and individuals weren't required to do business or personal guarantees. And then, our director here in New York decided, I don't know whether he made up his own rule or what, but came through and said we were going to do business and personal guarantees. What's going on there?
Yes, that is kind of a New York rule. This is a federal program, but there are state offices that interpret things a little bit differently. I think we've overcome that with that office. Obviously, it can if they want to get this money out, they need to make it attractive to the applicants. And the way we structure these loans, the farmer should not have to guarantee. I know we had to make some concessions to them, but I think they're in a little more understanding about it now. And as far as the grant money, yeah, it has been very competitive in the past. There wasn't as much money, but with this IRA money, I think people will have a better opportunity. They've got $820 million to get out nationwide this year. So, and then that's just with the IRA money, and then the other money is there too, the regular REAP money. And then I think for the next 4 years, it will be $180 million for each year. So, I think things will be a little more likely in the next year or two to get these grant awards. I don't think they'll run out of money as quickly. Hopefully not.
I think, Debra, I think the program is definitely improving, as you mentioned. One confusion that was there before was each state, when they were doing both grant and loan guarantees together, states like Connecticut and Massachusetts accepted term sheets on the loan. Mm-hmm. And when we submitted the term sheet for the loan in New York, we were thrown out. So we had spent like months to get it all together, and we were thrown out in a week. So Paul and I were quite frustrated about that because it wasn't super clear on the level of commitment that was required from the lender's side for the REAP grants. I know that has been clarified now, right, Debra? Because we are going through a couple of applications and we are getting commitment letters now from LiveOak Bank.
Mm-hmm. Yeah, I think it's been resolved. And that's another thing that on the federal level we're going to be pushing for. that it doesn't, that they need to lessen up these restrictions. If they want to get the money out and they really want to make the program successful, they can't be so specific about things like that.
Right.
Because these grant deadlines are, not everybody's going to have a project that they can apply on March 31st of every year. I mean, that's just not the way the real world works.
Right. Well, I think we are now experiencing this in Michigan and Pennsylvania on top, and we're just not taking the risk. We're just saying, hey, let's just get the commitment letter from the bank, because the first time we were thrown out was with Paul's project in New York. It was a bit of a surprise for all of us. But the second part, I think that Paul brought up about personal guarantees, we never had to sign any. We don't think we're going to be signing in the future. But New York situation, if you have more light that you can shed on it later on, I would very much like to catch up with you on that.
Okay. And that happened to us in solar too, that they tried to, in New York, they insisted that our solar projects have guarantors. And we'd never had to do it in any other state. We've worked in probably 30 states. So we're working on that and hopefully overcome that. And I think too, the state director of USDA is a political appointee, and I think if he could be made aware of this issue, it might make a difference.
Got it. No, for us, Bioenergy's mission is to not put burden on the farms. And if these projects, while we're working so hard with you and with all of our partners, the last thing we want to do is to put further burden on the farmers. So all your support on all of this is much appreciated.
Thank you. Yeah, we try to make it seamless. And USDA doesn't have a lot of staff. They've got some staffing shortages, so we always say we can do the work. Just tell us what you need, and we'll take it off your plate and do whatever we need to get it across the finish line. Thank you very much.